It's the daily price action journal. I will be breaking down GJ and gold today. Today we had a bit of mixed day for GJ within this consolidation. However, we have just broke this double bottom low. The later session at London close, we had a strong hourly candle here with no bottom wick, with no top wick. Sorry, it's quite surprising, really. Bearing in mind the time of the volume. So I'm just going to have a quick look and see if there's any fundamental reason behind that. But yeah, we have cleared these lows on an hourly, from an hourly perspective, and we have retested 152 500 as well, the hourly candle. So yeah, more potential downside to come for GJ. Back down to these lows maybe. So just having a quick look, seeing what's going on. Yeah, I can't see anything fundamentally. It wasn't a massive candle to be fair, but we have brought the bottom of this range at a later time than usual. I didn't really want to trade within this range. I weren't too confident on taking trades within it, but I did want to see rejections at the 4-hour highs here, or the 1-hour highs there at the top, and then we could sell it back down to the bottom of the range potentially, and cleaner buys would have been either above this high here or at the bottom of the range as well. But I really weren't really comfortable taking buys within the middle of the range. Rather take better sell positions or buy positions at the top or bottom of the range. So I'm going to break down price action now during London session. For terms of the sells, this area you can see 153 200 respected twice. Respected candle body closures, whip back up it again and then fail to trade above it. I'm going to just go on to the 15 minute and see if we had any slight clues there. So yeah, approaching New York orbit, maybe difficult to take that trade. Let's have a look on the 1 minute. So you start to see lower high formed, push down, and then when you do break this low here, these candle body lows, we do get that. We get a retest of that as well also. That could have been potential entry points. Or the break and closure here could have took potential sells. Price action would have been quite slow though. To start off with, and you would have been brought back to entry point. We'll close to entry point a couple of times. You do then get a double top scenario here. Price comes and tests this sensitive price area, fails to trade above it twice, and then pushes down. This might have been the good entry. Right, okay. So playing them further, corrective sells down. Here we get a 2 o'clock candle closing below 153, sorry, But yeah, bearing in mind, if you was to take this trade, you would have these sensitive lows to the left to look out for. But what I do like about this is that we do get that top wick. Top wick pushes up, fails to close above it, and you get a stronger bearish candle engulfing this bullish candle here. That would have been a nice sell scalp to take. 2 to 1 trade. Very slow. After this initial push though, you'd have stops at break even. Potentially, you wouldn't want to be closing back above this range here. That would make the trade idea invalid for me. But you get that strong push down into profit straight away. I wouldn't like this. Quite slow, choppy price action. Creating an order block in between the key levels really. But price never goes back to entry. No need to close a full trade. If you want to scale out some profits, you could. Eventually we get closures below these lows here. Get a strong bearish candle. Let's have a look. 15 minutes. Yeah, push up, push down. Again, sensitive price areas in the 1 minute respected multiple times. Previous highs which brought these lows here. Again, previous high here that brought these lows here is respected and failed to trade above it. So it's good to look at this on the 1 minute. It lets you see who's in control again, and you can see that again this high before the lows printed, the new lows printed, is respected once again. Interesting to see. You could dip into the 1 minute and just make sure that your sell bias is you're still seeing that sell side bearish structure. The 1 minute could give you first indications of that when you're rejecting these highs. I'm going to go into the higher time frames as well and see if there's any correlation in between candle bodies. Yeah, there is here. As you can see here, you have an area of previous resistance, breaks down, then it pushes back up, wicks up to that previous resistance area. Not even the previous, retraces back up to that resistance area and then pushes down. Do get this candle as well, wick up towards these wick rejections here to the left. If you did expect price to go down to the bottom of the range and grab the liquidity at these Asian lows here, you could hold your bias for more of an intraday swing and just play this corrective structure down. I do like how we've made the lower low and then we've failed again to close above these highs. Nearly back to entry though, but if you just leaving a small percent runner, then you'd be fine doing that. You'd have no FOMO if you got stopped out break even. And then yeah, as that continued push to the downside, so 30-minute candle closes below. Quite messy that really, because I wouldn't like the size of that bullish candle, but it does reject 152,800, very close to it, and we are still making lower highs and lower lows. Corrective slow structure down, and now we're just consolidating underneath the range we've just closed on the hour. What I would like to see now is I'd like us to hold resistance below this support level here and 152,500. I would like us to start holding support below there, holding resistance below there, and then we could either consolidate through Asian or get that continued push down and start targeting the lows of 150, 800. Start targeting them lows really. Once we start seeing more bearish market structure, start scalping these psychological levels to the downside. Bear in mind, we do have the majority of the clear traffic underneath 152,200. We still have these sensitive price areas to the left here, previous support areas and more recent support areas. So I'm just going to map those out. Just something to bear in mind. So ideally I would like to see us trade below 152,200 and start playing scalps down. We've got this clear traffic to the left from the sellers and buyers side in previous price action recently from last week. I wouldn't mind taking a position at 152,500 as well if we start getting resistance around there. But with Asian coming up, maybe that is more of a play for Asian session as price is very close to that level already. I'm just going to have a quick look on the weekly as well, just to see how the weekly's forming at the minute. So yeah, weekly, we are getting back to that weekly level as well, which we have whipped down to. Our weekly candle body closure level, it's quite a strong level, and that is at 151,200, which is right here as well. Right, okay, this is what I want to see. I want to see sells below here now. Bearing in mind we've got 4 hour levels just above it, hourly levels of course, and we have got a weekly level candle body closures at this level. So I would like to see intraday time frames at least on the 30-minute closures. Right, yeah. So at least a 30-minute below here, and then we could be able to optimize, get that weekly wick fill, take advantage of that clear traffic to the left, and we'd also be finding resistance below that weekly level as well, which is a very strong level, as price has failed to close below it for the last 2 weeks. On the weekly for the last 2 weeks, yeah. So that's what I'm looking to see here. In terms of buys, if this was considered a fake out, and then we started getting hourly closures back above this range here and started forming support, solid support above 152,500, and you could potentially play buy scalps back up to the top of the range. But I am in a more of a seller's corrective phase bias at the minute, so I'd happily take sells down to 150 and below potentially. Yeah, see how we get on. We are in this higher time frame consolidation on the weekly, but we are still bullish on GJ at the minute. But we could come down and test these lows here at 149,500. Right, back onto gold. Still playing them corrective buys up at the minute, but in comparison to this FOMC candle with the potential interest rate hike talks, early interest rate hike talks, the volume is very heavy in comparison to these candles. But we are also on the start of a new quarter. We are getting that top wick at the minute, so we could push up even more before flipping bearish potentially, as we are having multiple rejections at these highs now. 1, 2, 3, 4 wicks to the highs, which have rejected. So also had that strong bearish monthly candle on previous. In terms of, but still playing that corrective phase at the minute. We have had a daily closure now above that the daily range, which I didn't want to take part in. Quite messy, but we have had a nice closure above. Partly the reason behind that is the interest rates. The inflation increases on USD has brought some weakness to the US dollar, and we have now exited the no trade zone. So let me get rid of this now. So I can start looking for buy scalps on gold. Bearing in mind we are now starting to approach discounted levels, 50% of the range from the high it's printed from the last highest high before this low. We're starting to approach the discounted levels, so we need to watch out for potential reactions to them. For me, I think price will go to the 62% level and take out any continued sellers from these breakout sells of FOMC, and correct this move to the upside. And if we was to see rejections at this sensitive price area and 62% zone plus key level, I would be interested in potential swing trade, or at least an intraday trade on from this level if we do get the price action confirms and rejections around it. For the time being, I'm happy taking these continued corrective buys. We are trending up to the upside on intraday time frames, so there's no need to sell and try and call a top until we see some solid confirms and see price hit areas of interest further and key levels, and see solid rejections on intraday time frames such as the 1 hour or 4 hour. We're now approaching 1828. We've reacted nicely to 1228 and retraced straight back down to 120, 1820. It's nice to see the reactions to the key level. Also, we had a 4 hour closure at Asia just above the 4 hour candle body close and the top of the range, just above it. You would have potentially wanted to see a stronger close above it, but we did close above it technically, and we did get a wick rejection on the new 4 hour at and around 1812. So I'm going to mark that out as a potential area where I could have took a trade during London. Another area is breakout buys above this key level, and even now potential pullback. I said that weird. Pullback buys to 1820. You could have took a trade around that, the rejection at key level, which would have been very nice, really. 53 pips. So yeah. So they're my areas of interest, and also we'll just look at over here as well and just see how price rejected and reacted to 1828. So we'll start from London. You know, I'm going to do something a bit different. I'm going to do it on the replay mode as well. So this is Asian, New York, open, oh, no it's not. Okay. Quite a messy price actually, 9 o'clock here. Nice quick rejections off 1852. 8 o'clock. 10 o'clock candle. So there we go. So we get that 10 o'clock candle closed above the daily range. Let's watch price action after that. I'll just slow this. Yeah, quite messy price action really. Doesn't give you too much of a chance to get an entry on the 1 minute. You would have liked price to come back down to the key level, reject these lows here, wick off it potentially with that 10 hour, the new 4 hour forming that bottom wick. You could have potentially, let's see if there's any potential fib entries. Does look like a discounted area. Yeah, 62% level rejection. Could have potentially used that as confluence. We do eventually get up there, up and out it. New York Open gives us strong open, New York Open, tiny bottom wick, and then we get a strong volume. We do get a closure above the key level. You could take breakout buys above the key level. In terms of putting your stop loss on this, it's quite tricky for me because there's no minor supports close to it. That's quite an excessive stop for me. To be fair, you could have still got 2.5 to 1 below that big impulsive candle to the upside. So yeah, probably could just take it like that. Just above 2.5 to 1 that as well, so it's not a bad trade at all. I think the best thing about this trade is that this candle here is a good indication of the strong bullish volume coming into the markets in comparison to these baby candles, and I do like the consecutive bullish candles. You do get a small closure above it and then it doesn't look back from there really. Minor pullbacks. This candle's not as big as this one though, and there's not another bearish candle after that. It's instantly rejected, so a very minor pullback. A nice clean move to your key level really. For me, I'd probably take majority position as we got close to this key level, because just because there's key levels for next target doesn't mean necessarily it will reach to the on point there. It can react near or thereabouts there, and I wouldn't have liked these small exhaustion candles before that push down, which is interesting price action, and it just shows that we do get that bullish exhaustion and buyers exiting the market. Buyers exiting the market there, as we do see that momentum slow down. That's also the new 15-minute candle as well. That's the print in that bottom wick. So take the majority of the position there and hold some, because you're bearing in mind that yeah, we've got a new 15-minute opening here. There's no reason why it can't pull back and test this key level, and you could be stopped out at break even and re-entering emotionally potentially. So yeah, that bottom wick's printed for the 15-minute. and then once you get that closure above the high, you can continue your buys. Yeah, we do, but we start getting candle body closes just below the key level, but we are forming this lower high, higher low, sorry, and sitting above this previous resistance point. Yeah, we start consolidating around that key level really. First to go above it, and then we start retesting. Start retesting 1820 several times. Clear strength in these key levels. Very clear to see. Prices moving to and from them. In terms of that hourly closure, in fact, this is the new 4 hour. Get that bottom wick forming just before 5 o'clock. Double bottom. And you get that push up. Several reactions to it. And now we're just chopping back up to these highs there, but I wouldn't be surprised if we just consolidated in between these two key levels now, and then potentially get a breakout. During Asia. Either get a breakout throughout Asia or consolidate. In terms of trade ideas, I would like to take buys only at the minute, unless we. So now we're just playing that. Corrective. We're just playing that bullish market structure at the minute. So for me, safer sells below this high, the high that's been printed here, and safer sells below 1808. In terms of safer buys, I would like us to consolidate through Asian. I would like to take buys either at the bottom at 1820 of the range, or take buys of breakout buys above 1828 once we have more volatility in the markets during London or New York. So breakout buys above. So yeah, bottom of the range buys, it's sensible to take some partials at the top of the range in case we get rejections and don't take anything from the trade. But if we are taking buys above 1828, I have to bear in mind of the discounted levels we are hitting. Price can consolidate quite a bit around 50% level, discounted level. So that's something to bear in mind. We could respect it and then push back down and form support above 1828 500. I'd be happy taking buys above there if we start getting solid support formed there, and then riding them buys up to the discounted level, which I'm really got an eye on, which is the 62% discounted level and key level area. So yeah, I wouldn't be surprised if we hit the 50% and then came back down to form support above it before making that push up towards the next key level. And there's quite a big range in between the key levels as well, so that could be a possible intraday scalp idea if you do get nice tight entries around the key level area. Could be a nice intraday trade possibility, so keep an eye on that. And that's pretty much it really in terms of trade ideas, what I want from the markets. So yeah, that's pretty much it, I think. So DXY. Let's have a quick look at DXY as well, see what's happened today. Quite a range on the DXY today. Looks like we're going to go and test these lows of 92, 100, 150. Let's just get on the line chart. But yeah, still playing that bullish corrective structure on dollar, but we have slowed down at these highs now and failed to push significantly above these higher highs that have been printed. So a slight sign of exhaustion there. In terms of trade ideas, in terms of signifying the USD weakness, I would like us to get closures below these lows from that recent high that's just been printed here. I would like to see us break that lower high, that higher low, sorry, I keep getting muddled up to there. I'd like us to break that higher low and continue to the bottom of this range here. And if it was to break that also, just continue getting that deep pullback really. So yeah, play that USD weakness. If we do get them closures below, we can play that USD weakness on the gold in terms of the buy bias I have at the minute. So that's something to bear in mind. And that's pretty much everything.